Welcome, welcome. I am the FX Savant. Let's get this thing started. All right, so we here. What's happening? What's popping? What's Gucci? Drop a like, please and thank you. It would be highly appreciated. And let's get right into it. So here's what I want to talk about. Here's what I want to talk about today. Let's do a little trade recap. Let's do a trade recap. Go over what I had going on today. So I was looking at XBT USD. Simply was looking at just a nice higher high to be created. Of course, we can go back on this market. This is what we were looking at. We had price that had came down in this area, found some support, broke below it, came back, retested it, rejected from it. Then we finally started to break above that area. We came back, retest that area with a nice wick, showing a strong bullish candle. And I was just looking for a higher high to be created. So once we had got to this point, I was looking for a retest of just previous resistance. Now turn support. Unfortunately, got obliterated. But that is okay because the trading gods were with me. So as I was setting up for this trade, I pulled out my risk calculator and I typed in everything, figured out the risk for 1%, and I looked at it and I was like, man, that lot size seems a little too large for this trade. I'm gonna shrink it by 10 times and just do it that way. So say it was told me to open 5 lots. I said I'm gonna open 5 mini lots and see how that goes. Now I do want to make that a point, is to think like that is good. You're not over trading, you're not over risking, you're not getting greedy. Simply thought in my head, I'd rather under risk than over risk on this trade, because if I over risk and I take a loss, I'm gonna be heated. But if I under risk and I take a win, yeah, I'll be a little mad, coulda, woulda, shoulda, but it won't be detrimental to my account. So that was the case. This ended up being a loss, but instead of losing 1%, I lost 0.1%, which the trading gods was probably looking at me saying, you know, we cannot give you a win, but I'll look out one time because, you know, you're taking the necessary steps that you need to in order to do the necessary things the right way. So just always think about that. Rather under risk than over risk. If you're getting into a position and you don't know if you have the right lot size, pick something you know, or go a little lower than what you think you need, just because it could lose. And if it loses, you don't want to be in that situation of you risk too much on one trade and it lost. Remember, there's always going to be another trade. So if we just play this out, price came all the way down here, started to break structure, create some structure, then came, and if we zoom out on the hour time frame, we can see we're starting to create some sort of flag pattern, some little pennant in this area. And I had drawn this up and I saw that this was the low down in here, that if price was going to break down, it would probably find some sort of structure, resistance, or support, a struggle area right in here. If it did break below it, use it as resistance. It kind of did, but then it started to break back above it, using it as support once again. So just failing to break this overall low level down in here. Then after that, the longs was then in play. So this is when I applied the strategy. So took that loss applied the strategy on it. Just nice and easy. Waited for structure to turn in my favor. We started to break structure to the upside, breaking and creating structure to the upside, making higher highs and higher lows on this market. We got to this area where if we broke it to the upside, we could probably see price continuation on the way up. And if we did fail to break this area, then it was probably going to continue going down. So once price did show signs that it wanted to break above this area, and then it also gave this candle, you've heard me speak about it a bunch of times. It's the next one we want to see fill in the wick. Simply put, it's a push up and a push down on lower time frames, and that's what creates this wick. This push down area is the wick part, and this is the body that it ended up closing at. So if you go down on lower time frames, what you can find is that is just a simple impulse and retracement, impulse and retracement, impulse and retracement. Even on lower time frames, the market is a fractal, man, so it does the same things over and over and over. And if you can identify those patterns, well, you'll be golden. So previous structure resistance broken to the upside, now turned into support. Pretty nice entry, little to no drawdown right there. Targeted the overall high, so instead of just taking this, what I was looking for, I took the overall high of the structure and just target a higher high from that. So that was that. Also, real quick, this is the signal, so plug. If you are new, please drop a thumbs up, get some likes in here if you haven't, and you are new in this place, subscribe one time. But plugging myself, the signals I want to go over is just the signal that I just sent out recently. You can see it was sent at 136. Sent this out at 136 AUD CAD, and we can go over that really quick. Just simply wait, what? Oh, go to sleep. I got my mic on and it types for me, I forgot. Go to sleep. Thank you. All right, AUD CAD. Now we can do this thing. So what was I looking at on AUD CAD? Simply put, and once again, like I said, the market is a fractal. So keep this structure, keep a picture of this in your mind. So just remember what this looks like. We have a push up. We have a really big push up. We come back, break into the area, break. We start to, I guess you all would call this some sort of, I don't even know what y'all call it nowadays. I don't know all the new terms, but we do have a small little channel in here that price is continuing to respect now that we've broken and closed below some of these major structure levels. So just keep that picture in your mind. But let's go over it. On the weekly, what did we have? On the weekly, this is what I saw. I'm gonna say it once again, speak on it one more time again. Once again, my friends, this candle right here, I want to see the next one fill in the wick, because on lower time frames, all this is a push down, push back up, and I want to see another continuation to the downside. Not fighting the market. So the market is moving to the downside. We're still creating lower lows, lower highs. I don't want to fight the market. I don't want to try to pick the bottom of this market and try to buy it. So I can look for continuation to the downside on the weekly. This is a pretty strong bearish candle. We are in a downtrend, you could say. I mean, we are not doing it aggressively, but we are making our way to the downside, so we can look for continuation to the downside. On the daily, simply put, if you've watched any of my videos on the channel, you know how I trade here. I just want to see a nice and easy break of structure, come back, retest that area, and then continue to the downside. So if we take a look here, we had some structure support in this area, then the market broke it to the downside, and we've now came back for a retest. If we look at this impulse to the downside and take our Fibonacci from the high to the low, we can see that we come right in to the 618. We tapped the 786, but we're playing right around the 618, right around in this area. If we break above the 786, I no longer want to be in this trade anyway, because that's the last level of resistance this market will incur if it does want to continue to the downside. So that's like the final hope. Hence why the stop loss is above the wick of the candle that is above the 786. If it breaks up and start to make its way up to the stop loss, then I really don't want to be in the trade anymore anyways, and it can go ahead and hit my stop loss. I was wrong. But if I'm looking for continuation to the downside, I found a pretty good rejection candle. So we got in before this daily candle closed. It was looking like a doji candle, quote unquote. So what did I say? We came in, rejected the first level. Usually what happens once you get rejections on your fibs, it'll usually start to reject one level, reject the next level, reject the next level, reject the next level, and make its way down. So what we could see here is price come down right in this area, come back for a retest, retest, final retest, and then probably fall off if it does want to go to take profit for me. So on the daily, simply put, we have some rejections right here. 618 is the golden Fibonacci ratio. It's ideal to take trades right around that area. We have previous structure support that was broken to the downside, came back, retested it with a nice rejection wick on the daily. It's just real simple, man. Real nice and clean, easy setup. So far, so good on the daily. On the 4 hour, anybody in here, drop your name, drop where you from, anything. I'll talk to you. Got any questions, shoot them in the chat, I'll answer them. So if we drop down on the 4 hour, what are we starting to see on the 4 hour? What was I looking at? Price had came into the area, so this was our previous structure support, now turned as resistance, came in this area. I've spoke about a pattern that does this, come up, break down, we break that area, we come immediately back down, we use that area, and then we continue to go to the downside. So that looks like a left shoulder, a head, and a right shoulder. If we look at this market, we came in, we broke up, really we broke all the way up in this area. We had some consolidation, some indecision. Price didn't really want to know where it wanted to go, and then price broke up. We did not come back for a retest yet. Little doji candle, doesn't know where price wants to go, and then we immediately broke and closed below the structure. So not only did we break below the structure, but we broke and closed below what would be the left shoulder. So we're breaking and closing below structure on the 4 hour. We're starting to get our time frames in alignment. We had a weekly idea on, or we had a bearish idea on the weekly. We had a bearish idea on the daily, showing nice confirmations, and now we are starting to see structure being broken on the 4 hour in our intended direction. So get even more precise with it. You can see that this is the left shoulder that we anticipate. So once price started to break below that, we did have a little retracement. This candle was right around in here. I thought it was probably going to close a little lower before we came back and got the retest. But after that candle, I'll go ahead and run it back. After that candle, well, while that candle was forming, slide over here to the chat. I said, look, this candle's forming. I was thinking it was going to end up breaking way lower, maybe a few more pips than what it did. But I said, we're going to look at this right here. AUD CAD 1 hour sent out at 1:35, November 15th. Sell limit, everything, same thing on screen. And then I also sent out the video of doing exactly what I'm doing right now. So sending my analysis out on why I think this trade was a good trade. It had a good risk to reward, so almost a 4 risk to reward. A little risky, a little too early to be getting in, but the opportunity presented itself with a good risk to reward, and I'll take those trades all day. So, and then in the sell limit, price came then, triggered us in, then price, the next candle broke to the downside, another candle, you know, and then this is where we're at right now at market close. So that is what I had on for today, what I had going on for myself today. What was y'all trading, man? What was everybody else trading? Let me know. This is what I want to talk about. Next is BTC USD. So, yeah, I'm starting to smile because the stuff's right, man. Look, I said I was expecting new high to be created. So, what we have here is a bullish July, bullish August, bearish September, bullish October, and what we're expecting is a extremely bullish November. So we're about halfway through November right now, and I'm expecting a really, really big push. Two reasons why. So one thing, oh, I forgot to go back to the AUD CAD and show you why. So if we look at that on the hour time frame, AUD CAD on the hour time frame, what's it start to look like? If we look at it on the hour, and we go back to the weekly, what's the weekly look like? We have price break up, come back, break below that structure, and then we're starting to taper off. We come back for a final retest to come retest this broken structure right in here, and then it just fell off the map. If we go to the hour, what can we see on there? Price had some structure in here. We broke up. We're starting to break below it. We're going to come back for a final retest. This candle is looking like, and then completely fall off. So if you pay attention to what you're looking at, you can identify a lot of things. It doesn't necessarily have to be just a candle that you're looking at. Oh, this is a doji. This is an engulfing candle. This is a morning star. This is a 3 white soldiers or whatever it's called. But if you're looking at what the pattern is actually telling you. So we had structure here. Price came in, stopped. Then we finally broke. We came back, retested it, bounced from that area, but then we broke below it, came back for a minor retest with this hourly candle. I'm still expecting the structure to come retest this area, so I'm still expecting the right shoulder to fully be formed, but you know, it was a good entry if it does not and starts to just make its way to the downside. But I wanted to touch on that as far as looking at patterns, because when we look at BTC USD, we can identify a pattern, and that's all the market is just a big fractal, and it's the same patterns over and over and over and over, just repeating themselves. So if we look at what we have now, we had an extreme bull run, we had some retracement come back, then we had, like I said, bullish July, bullish July. Yeah, bullish July, bullish September, bearish October, and no, bullish August. That's what it was, bullish August. I don't know why I'm not looking at the months at the bottom. Bullish August, bullish July, bearish September, bullish October, bullish November. Now let's go back to 2013. In 2013, when everybody thought Bitcoin was hot stuff, then we had no idea, playing around at $200. You know what I mean? $200 here. We had an extreme bull run. We had a 2-candle correction, 2-candle retracement, and then what did we have? A bullish July, bullish August, bearish September, bullish October, bullish November, all the way up. So I'm expecting extreme bullishness on this candle or on this market for the next coming months. You look at how extremely bullish with all this momentum it was. So we went from $200 all the way up to $1,200 basically in 1 month with this same pattern that I'm talking about right now, that is actually and currently forming right now. And I even said it before the current price chart, before the October came, that it would probably come and retest the highs. That we're looking for price to come retest the highs, and we have this in 2013. this. So take a snapshot of that with extreme bullishness coming out of there, momentum to the upside. Everybody really geared up for Bitcoin. Everybody doing a lot of things, trading, talking about it. It's making big waves. And then what we do is slide over to today. What do we see? I can't make this up. And if you don't believe me, here's what I want to do to show you how much these patterns actually come about. So what I'm expecting, we got the bullish July, bullish August, bearish September, bullish October. I'm expecting a bullish November. Now what the market is doing right now is probably playing with y'all. We're broken the highs, broken the all-time highs. So Bitcoin is making all-time highs continuously. We're still breaking and making structure to the upside. So if we go to USD JPY, and it was crazy because I saw it and I'm like, dang, I know that pattern. I'm pretty sure it was. And we look at it on the daily time frame. Oh, there it is, right in your face. Look at this pattern. Look at this pattern. Can I make this up or not? This happened September 22nd. We had a big run to the upside, bull run to the upside on USD JPY on the daily time frame. So now I'm incorporating the fractal aspect of it as well. So like I said, the market is just a big fractal of the same things happening over and over and over. And if you can identify some patterns to help you trade that you can see are happening, oh, when price does this, not just necessarily the candle, but the whole market structure. Price went up, price came down for 3 candles. Now that is candles talk, but don't think about the candles. But price went up, price came down, price went up, price went up, price consolidated, price went up, and then price really went up. If we look at it, what do we have? Price came up. We have a 3 candle correction. Now the bearish candle is in the middle, is on the August, which would be the August, but we had the July, the August, September, really consolidation. So just market moving right next to each other, not making too much moves to the upside. And then what do we have? The next following month, create new highs. Then the next, well, I'm saying month, next daily candle, create new highs. Next daily candle, explode to the upside. I can't make this up, man. I'm not saying go out and just buy a bunch of Bitcoin and hope that it shoots up over to 100K, because that's where I have some predictions of it going. BTU, who's trading that? But I could see it going to 100K. If it went from 200 to 1200, why can't it go from 60K to 160K? Why not? So yeah, just food for thought. Think about that. Keep that in the back of your head. Now, what else did I have written down? Oh yeah, just go over some trades. Go over some charts. What y'all got, man? Throw me something in the chat. Throw me a pair. Throw me something in there and let's analyze it. Let's talk about it. Let's explain why. Let's get some knowledge going in this live stream. Got 2 people in here. Holla at your boy. What's up? What's up? Got the live cam going. Got the cam going now. It's really working. It's not lagging up, I don't think. I'll switch the lights up. Make it a little brighter in here. We'll go green. Light blue, green. What is that? I don't like going red. I like keeping it blue, because I only want to see blue on the chart. You only see blue in my account. You know what I'm saying? I only want to see blue. I don't want to see no red, so I try to keep away from red. GJ, let's look at some GJ. Dang, I can't spell. GBP JPY. Let's go look at it. So what do we have? On a monthly time frame, we have a big impulse candle. Next one I want to see fill in the wick. So What can we be looking for? We can be looking for possible continuations to the upside. Even though we did get rejected from these highs right in here, I do kind of want to see price fill in this wick, make new highs, continue to the upside. If we drop down on the weekly, we can see we've came right back down to previous structure resistance that should act as support right in here. We are starting to get some support acting right in here as well. If we take our Fibonacci on this impulse to the upside, what can we identify is that we're getting some, looks like consolidation right here, right around the 618, in between the 618 and the 786. It's kind of a strong pullback, kind of a strong retracement. I would honestly wait for probably structure to break above this level on the daily before I look to get in, before I look for possible buys, because right now we are currently testing all around this area, which is previous resistance, now turn resistance again, or previous support, now turn resistance over here. So if we drop down on the 4 hour, I mean, until we honestly, like I'm GBPJPY, until the market starts to break structure, like all in here, still the daily structure. I mean, I could draw it and be a little more exact, but it's still this, all this in here. I honestly wouldn't be looking for too many buys for long term. I mean, we can go into maybe some day trading setups and see what we can find on maybe the hour and lower time frames, but really the overall trend is still to the downside. I mean, we are up, but right now the trend is currently to the downside because we are below some structure levels. If we go out on the weekly, until we start to get some movement up, some further movement up on maybe say the 4 hour or daily, I wouldn't look to buy just yet. But for some immediate, well, not immediate, because I don't want y'all to go out and try to take these trades, but what we can look at and see is that we've currently broken above this structure, came back, used it as support, then we rejected from that area, and now we've broken, closed back into this structure. So before I look for anything buy worthy, I would like to see price break back up above this structure. If we drop down on the 15-minute, let's get a little more exact. I mean, that's our left shoulder. If we want to look at this overall structure as what we would probably come to realize is just a left ahead, we might see some continuation to the downside, only to come back to try to trick y'all into buying GJ, only to make a move to the downside. But it would be until price really got above some of these wicks, because what we have in through here, it's just previous structure support broken to the downside, now coming back for retracement, retest, exhaustion in order to continue to the downside. So plus, if we look at this, at what we've been forming, I mean, let's zoom back out on the hourly time frame. Look at all this, well, not all of this, but look at this move to the downside, nice big candles, nice healthy trend, coming back for a retracement, continuing the trend, and then now look at how slow and how many candles it's taken in order for the market to just start to climb, slowly climb, slowly climb, slowly climb, giving little profit, taking your old profit, closing you out at break even, hitting stop loss, giving you a slow climb, retracing all day, well, all hour, slow climb, slow climb, slow climb, get to this area, and now we're starting to find some resistance in this area, which if we just look, I mean, this would probably, I don't know if this would count as a head and shoulders. I would count it as a head and shoulders. Who knows? Somebody may. But we still waiting on our, what would be the right shoulder in this area. So, I mean, for right now, man, and you really can't look for buys short term or for sales short term, because we are currently in between this structure level. So we're consolidating right in here. So until we start to get some more volume in the market, honestly, it probably wouldn't be until the morning time you start to really get a good idea on what's the best probability for your trading, whether it would be short-term trading or looking for a longer-term play. I would stay out of the market. That's why I'm choosing this time of the day as well. This is the worst time to trade. So let's talk about that. Most people are getting off work around 5 p.m. The market closes at 5 p.m. Closes and reopens. So the spreads widen, liquidity is dropped, the volume's gone away. It's not the best conditions to trade. And when do most people have the time to trade? Is when they get off work or when they're chilling and when they're doing whatever. That's why I think a lot of people get caught up. Now I'm about to go to sleep after this. So the Asian session doesn't really provide too many opportunities for what I'm looking for. I'm looking for high risk to rewards, big gains on the market, or I'm looking for really momentous moves, which I need volume and a lot of big players in the market to make that happen. So I try to stay away from the times when the majority of the people would have the opportunity to trade in my specific, area. So in my region, my time zone, wherever you are, if you're in the Asian session, or if you're trading Asian session in Asia, let me see how I'm putting this. If you're trading the Asian session and you're in Asia, that's the morning time. Majority of people don't really have the trade anyways, is what I'm trying to say. If they're going to be going to work, if it's starting up here, if it's 5 o'clock, 6 o'clock, 7 o'clock here, 5 o'clock, 6 o'clock, 7 o'clock, somewhere right around in there. They're about 12 hours, 10 hours, 14 hours ahead of us. So it's not the ideal time to trade. If you're in London, the Asian session is right around midnight, 10, 11, 3, 4, 5, 6. I got a whole map. I just bought a mouse pad. I got all of them looking right at me with the clocks on them. So that's why I thought about that. But what I'm trying to say is stop trading during this time. This is not the best time to trade. This is the time to be forming what trades you're going to look for the next day. When the volatility kicks in, when the trades really start to set up. What you want to do is start to plan, okay, the day has ended. Now what you get is a general consensus of all sessions. So the Asian session had a chance to trade for the day. London session had a chance to trade for the day. And the New York session had a chance to trade. All their big players, all their big banks had a chance to trade for the whole day. And now what that daily candle looks like is the consensus of all of the big players on the day. If it's a bearish daily candle, then the majority of the big players closed the day bearish. So close with sales, or it was a retracement coming back from their buys or something. But majority of the players are playing on the daily time frame. So you can take a lot from just how the daily candle forms. If we zoom out to GBP JPY on the daily, next one y'all probably say is gold. So let's go to gold. It's gonna probably be the same thing here. It's not gonna be an ideal time for you to find a trade because the day is ended up closing. So if we zoom out, let's see what we can see. Price is breaking structure to the upside. Extreme movement to the upside. So we have previous structure resistance broken. Now we want to see it come back, be used as support. So what you can expect is, now this is a little advanced. So what you're seeing is the pattern I always talk about, but it's a little complex. So instead of it just being a straight, come back down, break up, come back, W, you have some complexity to it, to where we're going to see that this was the level that they're going to play at now. Now that this is broken, you want to see the price make its way up to this level earlier. That's why I say this is going to be a little advanced, because ideally you're getting set up for a bunch of trades. If you could have gotten in down here and been looking for the buy to the upside, then you would be riding the buy to the upside. And then once it gets there, you're looking for the retracement back down to this previous structure, and then you're going to look for continuation to the upside, because all this is just a giant impulse retracement. We want to see another impulse come and retest all this other structure over here. That's where price is headed. So for right now on the weekly, now that we've had this impulse to the upside, price can't go in one direction forever. So understand it is gold. It's possible that the next one or two candles could just shoot straight up depending on what comes out in the market. I don't know what's planned for this week as far as news, but what we can start to see is that yesterday, an hour or two ago, that daily candle still closed bullish. So we can't really be looking for the sale yet. The big players still close the day bullish on this market. If you're just simply trying to sell from right here, you're just trying to pick the tops, pick the highs without any confirmation, because there's nothing that says to go ahead and sell this market yet. We're still breaking and creating structure to the upside. Right now we're consolidating right in this area, but that's right after we created a higher low. So we're still in this area, hanging out. Moved up, came back, moved up, came back down for a higher low. This low is higher than this low, and now we're on our way up, which looks like we're going to create another higher low before we start to make our way up. Now, what I would be looking for on the daily is for a daily candle to close bearish. So if we see a bearish daily candle, then you can start to look for moves back down to this area. So you can start to look for moves back down to this area in order for it to break up, to come reach the overall highs over here. But let's go look at an immediate. There's nothing really that says really what really for a day trade tomorrow, what you're gonna look for, just to make it simple, is if price breaks above that, or if price breaks below this area. If it breaks up, it's giving you confirmation of buys, because we're creating breaking structure to the upside. And if it breaks to the downside, comes back, retests this area, gives you a funky. See, this is where it starts to get advanced. I start to want to talk about stuff that I'm thinking on, I'm working on. So this is the pattern I'm seeing. I'm still making a point to go and look at that. We have price came up in here, we had all this structure, price came back down, creating structure to the upside, breaking structure to the upside. We didn't really break the structure, so what we're starting to form is some sort of a top, to where if we do get a move back down, we're starting to look at this area here for a possible place to enter in on this market. So it might be something like that, come back in, retest this area right in here, all these. But with this wick being left up here, it does give the possibility to come all the way back up here and test this before it comes down and break. So really, essentially, what you want to do is look for a break to the upside. You really don't want to try to sell this market and be in early before the big players had a chance to come in and put their orders in and everything. If you happen to trade it and get a good position, you get lucky, hats off to you. But for the majority of people, it's going to probably come down and consolidate in this range for a while, play around all night, all day, maybe break up, break down, try to get somebody to come in and sell, and then ultimately come back up and do something like XPT did to me today. So I could have waited. Everything was in alignment for the buy, but obliterated everybody in on the buy right up there, and then gave the good and perfect opportunity later on in the day. Same thing, XAU USD. What I would look for is just a simple break above the structure, a clear and concise break above the structure, a nice 4-hour candle close above the structure, and then possibly look for a retest. After the retest, look for a good buy entry. So that's XAU and GJ. What are some other pairs? What are y'all? US 30, does it have a... Okay. Let's look at US 30. I don't know nothing about no US 30. All I know how I do is trade. You feel me? So let's just quickly go on the daily time frame. Quickly put US 30. Here's what I see. We are below this structure. What pattern is it? Everybody shout it out. Head and shoulders. So we need to see a break back above this structure, a clear break and close back above this structure in order for me, I keep saying us like y'all in the program already, but in order for me to look for a good probability setup, I need to look for a clear break and close above this structure. That's the only thing that would give me confirmations that this market wants to continue to the upside. If we start to drop down, what are we getting? Oh, that was on the daily. On the 4-hour. All right, that's cool. I need a daily break and close above that structure. Not with that rejection. Not with that rejection. So if we get a little 4-hour pullback and we get a break above this structure one more time, we come back and retest this structure and we get some breaks above it, we will then have the opposite, which would be a nice little inverted, take this whole structure, and once we get back up to this level in here, we then look for the retracement back down for the right shoulder. So not until we start to break up in here, once we do come and test this level on the 4-hour, if we do come and test this level on the 4-hour, I would then wait for price to come back down into this level, which would be my left shoulder, in order to get long. So it would need to look really nice, and I would put my stops below the low. That would be nice. If it did give a little low right there, that would be nice. Wouldn't have to put our stops all the way down here. Put the stops right around in here. Let's drop down on the hour, see what we getting. Yeah, until we start to see breaks back above this structure, we still have price giving us indications that it wants to continue to the downside. So once we do, if it does start to break up, come back, retest, I would then look, I would look for just a nice higher high to be created, man. So nice little 2.5 would be nice. Nice higher high to be created. US 30, that could be the play for tomorrow. If you end up getting something like that, bingy, early in the morning, something, then we looking at something like that. Why do I keep deleting them? Something like that. What's the other one? US 30 and NASDAQ. NASDAQ. Same thing. Over and over and over, and then I'll probably finish up here soon. We've been on about an hour. I wanted to get through, so go over my trades, talk about BTC USD, talk about the majors, go over some setups. I think GJ was the only one y'all had. I think I'm covering gold, US 30, NASDAQ, what everybody wants to trade. Those are probably the next one. I don't really see too many other chart pairs in there. And then I did kind of want to if I could speak. I then wanted to touch on cutting your losses early. I might talk about that before we run through NASDAQ just so everybody stays. So I know everybody wants to watch NASDAQ and then probably head on down. So I'll try to wrap this and make this quick, but cutting your losses. So what does it really mean? I had to sit down and think about this because, like everything, there's truth to it. Regardless of what it is, there has to be some truth behind something, behind it, some little truth somewhere in there. So cut your losses. I'm sure that there was some trader who was really, really good, and he was speaking to some other traders, and they were asking what was something they can do to improve their trading. And he was, cut your losses early, cut your losses early, cut your losses early. And I think that his trader mindset, because I feel like I'm there now, I think that his trader mindset was way ahead of what the people he was talking to were at. Because I'm sure and confident that he wasn't saying trade with no stop loss or even adjust your stop loss. I 100% know that he wasn't saying that, and I think that that's what a lot of people get from cut your losses early, cut your losses early, cut your losses early. What he was saying was mindset aspect. Cut your losses out of your head early. You're gonna lose, so don't dwell on it when you do lose, because there's always gonna be another trade. I was told this to someone earlier. There's always going to be another trade. Trading was here before you. Trading is going to be here after you. It doesn't stop right while you're trading. There's not only one trade, and the trade that you're in is continuing. It's going to continue to go. So as soon as you lose that trade, and I can speak on this from experience, you want to go back, revenge trade, or get right in where you got stopped out because it's starting to pull back towards your take profit, and you think you got stopped out by a pip, and you want to make this back real quick, and you can double up the money if you double your lot size. And no, that's not what he meant. He meant once you lose a trade, once you identify where you want to get in and where you want to get out, once those are met, you forget about it. You're done. Yeah, of course, now go review your trades and look over and see what you could have done better, but you don't dwell on the fact while you're in the trade, or even extremely after, like immediately after. You don't dwell on the fact that you lost. You cut the losses out, because I think people are getting from that is trade with no stop loss, one, and then they're thinking in their head, I'll have a mental place in the market where I'd like to get out if the price comes to that area, and we all know how that goes. Price, let me find an example. Something like this would be a good example. So say we were looking for a buy here. Price has been on its way up. We came back down for a little pullback. Might have touched the 382 or the 50 or the 618 of the impulse over. And that just gave you confirmations buy, whatever it is. So you say, yeah, I want to buy right in here. We got previous support, resistance, come back, act as support once again. In order for me to get high, come back, maybe come retest this area right in here. And what happens? You get triggered in on this market, and it goes extremely against you. So it goes against you, and you're like, oh man, I don't know where I want to get out, because you didn't think about your stop loss beforehand. You simply just got in with a lot size that you didn't calculate because you didn't know how much you were risking, because you didn't have a stop loss for your pips to calculate and everything. You were only looking at the profit side. So when it comes down, you start thinking about cut your losses, cut your losses, cut your losses. Now this is where it gets into the psychology aspect of where people mess up. So you think cut your losses. All right, I'm gonna cut my losses, start cutting my losses, start cutting my losses. You do that 1, 2, 3, 4, 5 times. In the market, no stop loss. Say you had a planned stop loss. If price got here, you're going to exit. You've been cutting out halfway, 50%. Then you do that one more time, and then price shoots from where you cut your losses at 50% of your stop loss, and then it goes on to break up and hit take profit. So now you're thinking in your head, man, I cut my loss when I didn't have to, or I closed out of this trade when I didn't have to. I could have let it just hit my stop loss, and it could come back and go to take profit. So what happens next time? Next time you have a mental stop loss in the market, you get in, you're not thinking about it, or even you place a stop loss, but you're not really thinking about your stop loss too much. You're just putting one just because the FX savant said I need to trade with a stop loss, so I gotta have one in there. So you put a stop loss in, or you don't have one, you got a mental one, then price goes against you just like it is now. Now in the back of your mind, you have in your head, oh, price can still go to my take profit. Regardless of what happens, it can still go to my take profit. It's happened before. And that's where it gets crazy, because in trading, you only remember the outliers. We really only remember the outliers as trader. We only remember that one time. You don't remember it as one time, but you remember the fact that it happened, and you think that it happens more often than it does. But it's really only happened 1, 2, maybe 3 times in the market. Everyone's had that trade where prices went all the way down to where their stop loss is right at it stopped a pip, a micro pip, 2 micro pips away from where your stop loss was, and then came back and went on to hit take profit. If you haven't had that trade yet, I'm sorry, you're going to get one eventually, but I'm sure everybody gets that one trade. And it's usually only 1 or 2 accounts people can recall on that trade when they really actually think about it. But the possibility of it happening is what sticks in your head and why it stays in there in such a fact that you want to remember it so much that you think, now I got my mental stop loss in here, or I got a stop loss, but said put it below the low. I put my stop below the low somewhere, and this is where it happened to be. Now you're trading and prices down here, you start to see negative numbers than what you really want to afford, because you never really accept taking that loss until you've done it over and over and over and over and over. I've got numb to the point to where losses, it's just, it is what it is. Like, even if price is 1 pip away from my stop loss, I just let it go ahead and hit, because it happens. It happens. Once you get used to it, it happens. But as a newer trader, you come in, you hear cut your stop loss. You do it one time, price goes all the way to your take profit. You're kicking yourself because you took some profits away. You closed out too early. So you've had that one trade that does the impossible. Now you're thinking in your head, I got a mental stop loss here. All right, let me get in this trade thinking about the profit. Think about where your stop loss is. More importantly, that's the most important thing, is where your stop loss is. And I'd say over your take profit. So putting your stop loss can win you more trades. Putting your stop loss in the right place can win you more trades than putting your take profit, because you'll end up closing out of your profits if you know you're only supposed to make. Okay, so 2%, 1%, 2%, 3% a day is good. I know 1%, 2%, 3% a day is good. So I have no problem with taking trades or closing out trades that are 1%, 2%, or 3%, depending on the risk. So I'm either risking 0.5%, so I'm either getting 2R or 3R, 2R or 3R, 2R, 3R or more. And I know that that's good, and I'm willing to accept that. So if I do happen to get more, I'm okay with closing out my position and, letting the price keep doing what it was doing. So what was I saying? Oh, we go back to this. It happens over and over and over, but you're so worried about that one time prices went to your stop loss and then went to the take profit that you think about it, and you're still thinking about it. I'm gonna try to make this even more quicker. You're still thinking about it. So you think price still has the opportunity to come back and at least stop me out at break even. So now you're saying, I just want to get back break even. Price is going to hit, it's not going to hit my stop loss. I don't want to close out early, but if it comes back to break even, I'll get out. And then what do? You either move your stop loss because price comes down in here and you're, oh man, it's hit my stop loss before, and that one time it did, it wicked it and then went back to profit. Or you're going to continue to run the trade because you're going to say, I've gotten to a point now where I don't want to lose this amount of money. I got a $10,000 account and this trade is down $3,000. I don't want to lose this trade, or I don't want to close out that profit. I want to wait and see if I can get some relief. If I can get back to 2,000, I'll close out. If I can get back to just 2,500 down, if I can just get back to being down 2,500, I'll close out the trade. Then what happens? You come all the way down here, price comes right back to your entry. And right exactly where you said. Like, it gave you more than what you were asking for. If it just gave me $500, I'd be okay with closing out at a $2,500 loss on my $10,000 account. Price is now sitting at your entry, and here's what's gonna happen. You're gonna say, oh, now it has the opportunity to go to my take profit. It's all set up now. If it went all the way down here, this must have what do you got? What is it? Oh, grab the liquidity. This must have grabbed the liquidity down here. And now we're starting to see extreme bullishness to the upside. And big banks are stepping in and blah, 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 blah. So now instead of, first off, you should have closed the trade where you originally thought you were going to close the trade, where you decided to close the trade. If your lower low was right here, you should have closed the trade or let the market take you out right there. And then you can look for a re-entry because there's always another trade. Remember that. Whenever you take a loss, just think in your head, there's always another trade. How many times have you taken a loss or a losing day that compiled a bunch of losers only to go to sleep and wake up the next day mad that you took all those losers and you have the perfect couple setups now and you can't trade because you're still in some of those losing positions and you don't, it just messes up your whole trading. So just remember, whenever you lose a trade, there's always another trade. Always another trade. It doesn't have to be on currencies, commodities. We could be trading thoughts 100 years from now. So thoughts could be in the market. You could be looking at charts, trading someone's thoughts. So just remember, there's always going to be another trade, regardless of what it is. Corn, you can trade corn. But what happens is the price comes back to your original entry. Break even. You sitting at break even. Man, I could close this trade out now. I was down 5,000. I was down 50% of my account. Shoo! Now I'm back up to break even. That was a wild ride. I could close, but what if? And that's where you get got. When you get that what if going on in your head. What if price has already shown me this, but what if this happens? What if price shoots all the way up? What if some news comes out and a big explosion candle goes to the upside? What if? Oh, that now you're just living in a fallacy world. And then what happens? You don't close at break even. Remember that. You don't close at break even because now, price can go to the upside. Now you were really excited when this candle was up here. So when we had the price breaking all the way up here, you were, oh yeah, now I'm a little bit more profit, man. Look at this. Now I'm good. Then what happens? Price starts to break back down, and you, oh man, if I can just get back to break even, I'll close out. Oh man, if I just get back to break even, if it just goes back to break even, I'll close out. Now, mind you, this is right around the original area you plan to get out at over here on this side. And I will say this, the market usually gives you 2 opportunities to exit. So what I mean by that is, let me pull up an example and we'll come back to NAS 100 because that's the example we're talking about. XAG USD, I think it was. We took this trade last week. Or I took this trade last week, sent out this trade last week. Now, you get 2 opportunities. Most of the time, a lot of the times you may not even know you're getting the second opportunity, but the market likes to give a second opportunity sometimes. And if you don't get it by that second opportunity, it's fool me once, shame on you. Fool me twice, shame on me. Now, you've had 2 opportunities to exit the market at a position or at an area you thought was ideal. If the market gives you a second opportunity, you have to be grateful. But for instance here, we had to take profit right around in this area. We came up in this area once, and that was take profit met. But if it was not met, price then pulled back and gave the opportunity for you to take profit once again at that same spot. Not saying this is going to happen all the time, but I've paid attention to some patterns and I've seen that the market likes to push up in one area and then come back and then it'll retry that area again, which is usually the second time. That's your second opportunity. I'm only going to give you this twice now. And then it'll go away, Then the price breaks all the way down here, confuses you, do all this. It did come back and give us the opportunity again. But you can see, I just want to say that usually price will give you a second opportunity, because that's just the way structure works. Everything works on structure in the market, and that's just the way the candles form, and that's just how structure works. It was previous resistance and support over in here, so over in here is going to be previous resistance and support again. If that was your area you wanted to get out at, if it breaks below it, it might come back, retest it, give you an opportunity to get out of that area again and continue to the downside, or it might break it to the upside and use that area as support once again and give you an opportunity to get out. But what happens is, I didn't even mean to go all the way back here. You're here sitting talking about, man, if I can just get back to break even, then I'll go ahead and exit this trade. Now, mind you, you were looking for something all the way up here, impulse buy, just trying to buy from the lows without looking for structure to be created. Yes, we did break some up here, but we just obliterated this structure area right in here. So now you're saying, I just want to just get out at break even, but you've had that one time where the markets came close to your stop loss and went on to take profit. And you're looking for this one trade. Now you're marrying this trade. I know you've heard that. You don't want to get in love, fall in love with a trade, marry a trade, get too attached to it. So now you're starting to marry this trade, because what happens next is, now you got no stop loss. You're really in trouble. If you're moving your stop loss, if you have a stop loss, but you've been adjusting it and moving it and then stopping it down, I'll just move it 3 more pips, 3 more pips, 3 more pips, 3 more pips, 2 more pips, 5 more pips, 6 more pips, 1 more pip. I'm moving 1 more pip, and then it starts to retrace, and okay. But here, now if it comes back to break even, I'll get out. Now you're back down to your 5,000, 50% down to your account, 60% down to your account. If it comes to break even, I'll get out. Now, mind you, this is all talking about the cut your losses early concept. Cut your losses early. You had a loss over here. This was a losing trade over here. And you spent these 1, 2, 3, 4, 5, 6, 7, 8 hours still in this trade, still worrying about this one loss that you've had, trying to keep it and turn it into a winner without any way of controlling the market. So you're still in this trade. Man, my account's almost gone. I don't want to close it out now, especially not 60% down. Boom. Your account's probably blown. If you've been moving your stop loss, I'm going to put it right below this, 3 pips below, and I'm going to just see if it'll come down here, because we should have some support over in here, and price is going to do something crazy. And then what happens? Obliterated. All because you just didn't cut your losses early. You didn't just say, man, all right, this is a losing trade. I messed up. I effed up. Let me get out of this trade. Manage my risk. I'm not losing too much. 1% isn't too bad. That still gives me 100 more tries, 99 more tries. And you go on from there, man. So, yeah, that was cut your losses. About 20 minutes. I wanted to make 15, but about 18 minutes. So let's go over NASDAQ, and this will probably be it. And we'll get on up out of here. I appreciate y'all for coming in, being here. Go ahead and drop a thumbs up if you would be so kind to, and go ahead and subscribe if you are new. But we can look at NASDAQ. What we got to do is zoom on out. Ooh-wee. This mother look nice. Oh, snap. Oh. I ain't never looked at NASDAQ like that. Check it out. This is nothing but just pure love for me. I'm Trend Trader Central. I love that. But what we have on the weekly right here, let's see what it looks like on the monthly. Yeah, we just broke structure to the upside. So we have some weekly resistance right in this area. I mean, to be honest with you, this would be ideal if it came back, but as the trend has gone, it would be ideal if it came back, did something, maybe even broke down a little more, came back in here, did something, broke back up, something like that. That would be ideal. But with all this momentum to the upside, we are just, we don't need to come all the way back and retest the structure is what I'm seeing. Something like this, we don't need to come all the way back and retest the structure. We just need to touch it one time. So since we have not touched it yet, and we started a bearish candle on the weekly, I would expect more continuation only down to this area, because until we break this area to the downside, we're still breaking structure to the upside. So we're still trending up, still making and breaking structure to the upside. We're still trending up, which you would still like to see. But for the immediate right here, what I could see is a little exhaustion right in this area. We got a nice move to the downside, some pretty strong candles to the downside. So if we look at it, we have 1, 2, 3 candles up, 1, 2, and 3 candles down. So not as extreme as all this momentum to the upside, but we're starting to cover some of the same ground with some bearish candles as we are some bullish candles. And we're starting to take more bullish candles to cover the same ground as the bearish candle. So once we flip on this side, it's taking 1 bearish candle to get all the way down here. It's taking 2 bullish candles to get back up to the same area. 3 if you're counting this one in the wick to come up and retest the full price. So if we drop down on the 4-hour, I mean, we're starting to break and create some structure in this area. See what it lines up with. We do have some structure resistance right around in here, structure resistance right around in here. Price came into it, price came in, rejected it, price came below, came back, rejected it, came up once again, rejected it, starting to come in here, broke above it, came back, rejected it to the upside. I could see it possibly coming back for a retest, and what we are starting to see, you should already see this pattern forming. Let me see if I do it this way. You start to identify it. If we have a push up here, and we have a push up here, and then we break back down, where do we have structure? All right in here. This is previous structure support on this side, broken to the downside. Want to kind of see it act as structure resistance once again. Also, you can say that this is some makeshift left shoulder. This is the head, and what you would like to see is this area be used as the right shoulder in order for us to see a movement to the downside. Now, the only thing that worries me is that this is so bullish. So be cautious of that, but we have broken below this structure. So we had some structure in here, and we have then broken below it. If we pull out our fib, what can we identify on this market? Take our impulse leg, we can see that we are getting 618. I mean, your boy can get on some NAS if it's this. If it's gonna be like this, we got 618 right in this area, starting to consolidate right below the 786. If we do start to break above the 786, it's no coincidence the 786 lines up with this area, and that I'm saying if it breaks above this area, you want to see it to the upside, and that if it respects this zone, we want to see it continue to the downside, because the 786, it's not because of this, but confluence is that the 786 is the last level of resistance in this case that the market should incur if it wants to continue to the downside. So since we've broken this impulse, if we want to see continuation to the downside, we don't want to see it break above the 786 if you want to see that continuation. So what I would like to see is some sort of, we can have some action right in here, some price action happening in here, maybe even come retest the top of this left shoulder. I gotta get better with drawing. My drawing looks like a 4-year-old did it. We could see some retest of this area right in here. Maybe if I held it straight, that would help. You could see a retest of this area right in here, just to fill out that. But you know, that's all with the strategy. That's all in the program. You know what I mean? How to take advantage and figure out if you're gonna really do it or not, and what's a good way to get in, or when to get in, how to get in. That's the little plug. So that means we probably gonna wrap it up, man. If I'm throwing plugs in there, I appreciate y'all for coming in and viewing, kicking it with your boy. I might end up doing this 5 days a week, man. Why not? I might look to start a little earlier because, like I said, it's nap time for me. It's bedtime. I'm about to catch some shut-eye and wake up tomorrow for the next day. Update everybody on everything that I'm looking for tomorrow, and then just wake up and do it all over again, man. Once you start to get this routine down, not necessarily a routine, but it becomes routine, then I think you're really pretty much there. I'm starting to see that a lot in the videos that I'm watching on YouTube and everything. People are talking about, man, I just do the same thing over and over and over. This is the trader lifestyle. People want it. It's boring. You wake up, you take care of business, you do what you got to do, check on everything, run through all your stuff, get stuff done throughout the day, come back, set up for tomorrow. So with that said, the program is now open. This is the cheapest it will probably be. It's only probably going to be this cheap for another week, probably until next Sunday, Monday maybe. And then the price will go up. The more and more I add to it, man, the more and more I add to it, the more and more the price is going to go up. So, you know, opportunity to get in now. It's just like a good opportunity. You want to buy low, sell high. So you want to try to get in before it gets too crazy, too astronomical, for too much education gets in there. Plus, that's the whole, you get in early, you get the benefit of it cheaper, you get to grow with it, you get to experience everything as I put it in, put it out. You know, if you come later, you don't get to grow, but you get everything right then and there, all thrown in your face on a full platter. What do you go through? If you come in early, you get the early things before they're added. Well, you get them early, but you don't have them yet. As they're added, you know, your place is saved, you're grandfathered in. So with that, I was able to understand how to take advantage of this market, even after losing what would have been 1%, making a 3% winner on that, and then go to sleep. And then with the same knowledge that's in the program and everything that I teach, was able to find this trade. Once again, just for proof, I got to show my proof because I make a lot of bold statements. I've been calling a lot of people out, saying a lot of things, and I just wanted to know, I want y'all to know, put some weight, put some respect on my name. I'm doing this. I does this at 136. I called this AUD CAD sellout, and so far you can see it's running quite nicely. We're about 14 pips into profit now. I am expecting a pullback, but the knowledge gave me everything in the program. That knowledge gave me what I needed to take advantage of this market, and it's looking like a pretty good setup. So yeah, consider joining. If not, I would recommend you subscribe to the channel because I do try to give out as much free education as I can, and whatever people are asking, I try to feed the people. You know, I'm a man for the people. I'm the people's man, so I'll try to give you what you want to the best of my abilities in the correct way. So just make sure you're subscribed with the post notifications turned on. If you haven't done so, go back and check my catalog. I think I have some really good content in there early on that may have been passed up because of me being a new creator. It may not have gotten pushed or gotten to the eyes of people that really would enjoy it or need to see it. So I would recommend you go back, just watch some videos. It's good content to just throw on while you're doing something, playing video games. You can also listen. I talk a lot, as you can tell. So I tried to be really detailed and intricate with what I'm saying. So yeah, man. Like the stream if you're here. An hour and a half on the dot. An hour and 15 because I started at 5:15. So an hour and 15 minutes. Not bad. Let me know if you heard the music in the background. If the music was too loud. If that was just right or what. Because I'm supposed to be having some music playing in the background. I can't really tell because, you know. Let's see. But that's it, man. That's really much it. Oh, we do got the background. Yeah, do got the music in the background. So yeah, man, that's really much it. Once again, I am the FX Savant. I appreciate you for tuning in. And I hope you have a profitable day on and off the charts. Until next time, I holla.